Allianz is Europe's biggest insurer. It also owns Pimco, the California asset manager. Oliver Bäte took the helm of the group back in May. He joins me now. Thanks very much indeed for joining us.
It's a pleasure.
Now, turmoil in China has unleashed instability in world markets. How concerned do you think investors should be?
We take a more long-term stance. We've actually been surprised about the harshness of the reactions in the market. My personal point of view is they've overreacted quite a bit. Where we see some softening in China, they have quite a few instruments at hand to manage the situation. So we believe, yes, there will be a slowdown, but it, in my opinion, doesn't warrant the reaction that we've seen in the markets.
Now, you were previously head of Allianz's business in Southern Europe, including Greece. What do you think needs to change for the Eurozone to be more prosperous for all its members?
The first thing, and it might sound very Germanic, I'd have to admit, it is we need some clear rules. What are the rules that we all are operating under when this union was made and we introduced the currency? And it said we have to have certain rules around what budgets can you run, how much money can you spend. And quite a few of the countries, these rules were not adhered to. By the way, starting first with Germany and France when they went over the budget deficit hurdle. The second thing that is very important is that we deal with the structural issues that we have inside of the Eurozone, and we have very different economic engines. We have very strong engines like Germany, and I personally believe France is going to come back. And then you have small countries that are still struggling with economic growth, employment and productivity improvements, and we have to help these countries to fix the fundamentals.
Now, one of the big tools that policymakers have used to improve economic growth is our low interest rates and cheap money. That's causing a big problem for your sector, the insurance industry. How big a problem is this, particularly in your home market, Germany?
It's a significant challenge wherever the interest rates are ultra low. The financial sector lives on nominal interest rates. When those are very low, incomes fall, there's a lot of pressure on cost. And in particular in life insurance, where we offer very long guarantees to our policyholders, that creates enormous pressure on investment returns. The other thing it does, it forces many people with fixed liabilities to take on risks and more risk over time, and then asset bubbles build, particularly as we see it now in credit markets, that eventually have to burst.
Now, the low interest rates are also encouraging capital to pour into the insurance sector, and that's pushing down premiums in many areas. To what extent do you think insurance risks are being mispriced?
It's absolutely true what you're saying. We're seeing a lot of capital flowing into property casualty industry, first through the reinsurance sector, and then into large commercial lines, particularly short-term business, where people can take an easy bet on returns relative to risk. At least that's what they think. And then it trickles down through the reinsurance markets into primary insurance. So in many markets, we see pressure on rates. And that means, as through the last cycles, that you have to be really good at what you do. You need to be able to price risk really well. You have to have very high efficiency, that your profitability is better than your neighbors, and you have to have the financial standing power to go through the cycle. And to be honest, I expect also some clear up, not just in life insurance, but also in property and casualty insurance going forward. So I expect that a lot of companies will have to do two things at the same time. The first one is to deal with a soft cycle, but the second thing is to actually deal with digitalization coming towards our sector as a speed of light.
Now, some of those trends are encouraging the M&A fever that's gripping the sector at the moment, and some of the prices are pretty eye-watering. Do you think these deals make sense, or is there a risk that they will come back to haunt buyers in years to come?
Again, I don't want to be the judge for other people investing their money. Every investor, every company has to make its own decisions. It's quite interesting, as you say, that the valuations have gotten to be very rich. There's some good reasons for doing M&A. As we've just said, there is cost pressure on the industry. There's room for cost improvements. But there are also not so good reasons, like I need to get large, I cannot show earnings grow, and I'm buying something just to get bigger.
And what is your appetite for deal making as the new Allianz CEO?
Oh, it hasn't really changed. I think Allianz is very consistent in its strategy.
That's quite conservative, right? Because you
Yeah.
guys haven't done any big deals really at all.
We haven't done big deals, but we have done quite a few. I have to, just if I may, point out to the fact that last year we took a significant portfolio in Italy. We've doubled our market presence in Turkey the year before. We've strengthened our position in the Benelux. So we're quite active.
And where does growth come from Allianz then, given the economic performance in many, if not all of your markets, is fairly subdued?
Yeah, that's a very good question. That's what we're spending a lot of time on in times when interest rates are down, so investment income is coming down, the bond markets are turning, life insurance in traditional ways under pressure. You might wonder where the growth is coming from. If you look back over the last few years, we've done a great job to grow not just top line but also the earnings, and I think we will continue to do that. It's not yet visible, but we have a lot of engines that are going to do well in the environment that we've just described.
Now, your asset manager, Pimco, is recovering after it was hurt by the departure of the bond guru, Bill Gross. Now, Allianz has been clear in the past it wouldn't consider selling Pimco. Do you think it could possibly be on the cards or not?
No, our position hasn't changed at all. We have full faith in the management team at Pimco. They have been going through a very difficult time. Let's remember, it didn't start with the departure of Bill Gross, but with the secular change in the interest rate cycle, super cycle. And those changes don't go without turmoil. However, I've seen great things from Pimco. The most important thing was for them to focus on their clients and on investment performance, and particularly since the end of September after the departure of Bill Gross, which we do regret. And most recently, we've seen inflows in our new product suite, which gives me a lot of confidence that sooner rather than later, Pimco will turn the corner.
Oliver Bäte, are you ready to play long short?
I'm ready to play long short. Let me try.
US stocks.
Long.
City of London.
Long.
Chinese economy.
Long.
Open German borders.
Long.
Gold.
Short.
Oil below $20 a barrel.
Short.
Donald Trump.
Short.
Oliver Bäte, thank you for joining us.
Thank you.